Hello, everybody. It's Bob Anderson, and it is July 15th, 2024. And I'm going to go over the trades that I saw that would have been met the rules for the 1 minute gold line, 5 minute red line, and the overnight open today in gold, NQ, and RTY. Again, I get a little passionate about this because I'm telling you, if you follow the rules and you look for the trades and you take the entries where they should be and the targets where they relatively should be and that kind of stuff, you too can be, successful, positive in trading. Uh, you know, I'm just not sitting here telling you, oh, you do this and this, and you're going to make $14,000 a day. Anything ridiculous like that. It's trading is a journey, and the first step in that journey, besides learning discipline and learning understand how to actually even function in trading, is to then have discipline. And I mean, beyond discipline is to actually execute properly and become profitable. That later down the road, after you become profitable, you can then potentially learn how to be hugely profitable. But, Rome isn't built in a day. So let's talk about, let me quickly talk about last week. Last week was the week after the 4th of July. I was on vacation the week of the 4th of July. I said that. And I traded. I didn't even trade Wednesday last week. I had a meeting. I was gone all day Wednesday. I traded a little bit on Monday, Tuesday. I think Friday, maybe Thursday. I don't remember. But what I do know is this: I have my 5 PA accounts with Apex that I've had for a while. All those moved up across the board, $450 last week. And then I have my 5 brand new PAs that I have lifetimes on also, that I got when they had that 90% off pass in a day garbage. So I added those on, and I actually started trading those last week, and they all went up $450 last week because I traded them all together. So, and I mean, I traded them extremely conservatively, one contract, no hocus pocus stuff, no craziness, because the reality of it is, I mean, $450 may not seem like much when you're going to say 53, but it seems like a lot when you put it across 10 accounts, and that's $4,500. So let's talk about trading for today, because this is Monday. Monday's my busiest day. So I did trade today, but I took one trade, closed it out, and I'm done. Now I'm sitting here in the afternoon, and I'm going back through charts. So it's all new to me, the charts. So I want to go over those with you and kind of tell you what I'd be looking at, why I would take this trade, why I wouldn't take this trade for 1 minute gold line, 5 minute red line, and overnight opens if I see any. So let's go. All right. So here we are with gold right here. So gold was like sitting, gold opens at 8:20 in the morning, and then it was sitting on the overnight open. You see that? Now it did have a thrust down here and create a new Donchian low, and then a roll up into the 1 minute gold line. But I'll be perfectly honest with you, I don't know that it in live it pierced the 9 EMA. I don't remember seeing that. What happens is, see this big red candle here? That has a tendency to pull the head of the 9 EMA down, and therefore it crosses that. I don't know that it ever pierced. If it had, you would have gone down and then back up, but I'm not really looking for much once we start getting close to the equity markets opening, because when the equity market opens, which is right here, see this craziness? That's a lot of movement. So what I'm waiting for, once we get past the open and we get past 9 o'clock, and now we're going to the equity market and we're looking at gold, I'm looking for the market to show me its hand. What direction are we going? Going long, going short? Which direction are we going? Tell me where we're going. Okay. So we get, past say 9:45, we blow. We didn't create a Donchian low here. So like there's nothing new here. Like we didn't break this pivot here. So this is a sign in a lot of cases that we're rotating. We're going to actually rotate the other direction because this slammed down, but it didn't break this here. Roll back up. We're sitting into the 5-minute red line, sitting there, and wham, up we go. All right. Let's talk about this. So, by the way, this is the trade I took. I'm not going over that here. This is not part of this today's video. This is the one trade I took. And by the way, if you'll notice, big green candles. It's like I can foresee those big green candles because of certain price action things. What are some of those price action things? Well, we're going to talk about that right now. All right. So what makes this run up to this overnight open and back down into here such a good trade? Well, we're going to talk about that. 3 things. Okay. And this is very important. First of all, let's go over basic things besides the 3 things. One is we're looking for longs because we're north of the 5-minute red line. See that? Price is north, so we're looking for longs. Okay? And then the overnight open's not relevant, but the point is it's not in the way, which is good. So we blew up through, created Donchian high, never rolled into the gold line, rolled back up, created a new Donchian high. So before we go back to the gold line, what we're looking for is a Donchian high, which is right here. Okay, before we go back to the gold line. So we go up here, back to the gold line. Now, what are some of the other positive things? Well, there's 2 of them. One is right here. There's space. See this space here? Space means volumes coming into the market because price is running away from the overnight open. I mean, running away from the 9 EMA and the 5-minute red line. By the way, below this video is where all the indicators that are on this chart are. They're just moving averages. I don't use any real indicators. All right, this is all price action. So anyway, so we got this space here, this gap that was created by this thrust up and a pullback, and that's what you're looking for. You're looking for the rubber band to push it out, and then you're looking to slingshot that rubber band back, which is this, to then rebound it that way. Okay, this is a repetitive pattern that happens more when the market's got more volume, which is not right now. So you got to really hone in between like 9:45 and 10:15 to see these, because if you don't hit them in the morning right now before the volume, because the volume is so light, you're probably not going to get them. So anyways, so all this space here, and then we have that Donchian high, and then we have from this pullback to the top of this candle, we have all this space here. Why is the space above important like the space to the left? Well, the space above means you've pulled that slingshot back. You want, if you're going to slingshot that thing, you want that thing to be pulled back. Price has pulled back. They're squeezing out the stops, okay, of the people that are going long before they reverse it and run it the other way. The other thing is, because there's space here, that gives you space from when you enter, like on this one, from the break of this candle here, you're entering at 23.8. Okay. Well, 23.8 to 24.8 means you've got 10 ticks before you even get back to the pivot to your left. You want that space before you get to the pivot to the left from your entry, because there's going to be resistance at that pivot. Okay. Normally there's resistance there. There's a reason it pivoted from there. Okay. You don't want to be in a trade. You don't want to just get in a trade, have no profit, and then you hit that thing and it's like, then it's bouncing back on you. I'm very conservative how I trade. I like to get in, and the first thing I do is grab my stops, because that's the most important thing on the chart. at the time is your stops. And I grab my stops and I follow, 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 follow. Okay. So anyway, so because you got this space to your left and your space to the north, wham, there's your trade. Okay. Now let's talk about this. So now you create a new Donchian high right here. So that's this right here, right? You got space right here. Wow. You do. You have space right there. And you have space right here. Right here. There's space. So why wouldn't I want to take this trade? Well, remember, we're talking about the 1 minute gold line. We need that smooth pullback where the top of the candle to your left is either equal to or above the candle to the right. And that is extremely important. Okay? We're going to go over that right here. Why is that so extremely important? Because you're looking for that consistent pullback and that consistent thrust forward. See how this came down and you had this inside candle here? It's inside the top of the bottom of this one. You see how I had this one? And then this broke the top of it. Now, if the market was wanting to go long, this thing would have just shot right up from there. I mean, it just gone. I mean, we see that all the time. Okay? It doesn't have to come back to the moving average. So when it did try to do that and it rolled over, that means we're rolling over in my book. So let's talk about that. See how this top was higher than this top? That's what stops you from getting into, in my opinion, bad trades off the 9 EMA. Watch this. So here's the battle. They're battling. See that? See that battle? The longs are trying to figure out why we aren't going long. Why are we not going long? Because the shorts told you right here they don't want to go long. What happened? Bam. Down it went. And it's all because you saw this right here. That thing pierced the top of this candle here, and then it went down. There's no trade there. There's nothing there. There's nothing to help you. There's nothing to save you. Okay? And again, because it's summer trading, this gets ugly early and it gets lazy. All right? So that's what I saw in gold. I want to talk about NQ now, and then I'll talk about RTY. Hold on. All right, so let's talk about NQ. All right, NQ opens at, remember now, NQ opens at 9:30. Okay, so and it can be really hyper and it can be kind of crazy. So I like to let it again show its hand. Show me what it's doing before I get involved. So let's talk about potential opportunities today. Okay. So where's 9:30? Here's 9:30. So bing, bing. I'll be honest with you. When this part right here was running down to that overnight open at 9:46, I was praying it was going to pierce because that was what I was going to take, was that long. And the damn thing oh my God. Let's see here. 3 ticks, 2 ticks, 2 ticks, 2 or 3 ticks from hitting the frickin' overnight open and then reversing. Anyways, so let's just talk about then. So there was no overnight open trade. But one of the things you got to understand is that that this strategy is trying to mimic what the market makers are doing. So for example, when it blew out the top here, they know that a lot of newbie traders are chasing that. And so what did they do? They intentionally let it go through and then slammed it all the way back down here. That's why. And then when they do that, they're looking for a place of reversal. And I knew when I saw these huge red candles, I knew the reversal place was here. I mean, I just knew it. But the problem was it never gave me the entry. So here we go. We do this, do this, do this, do this. And then wham. Now we create a new Donchian high. And what are they going to do again? Because people are chasing it out, they're going to run it back. Where are they going to reverse it? Well, now that we're after 9:45 and that kind of stuff, we're looking for the 9 EMA, the 1 minute gold line. So, did this trade work? Well, we have daily, you have your Donchian high, lower high, bam, gone. That was probably 350 some odd dollars. Am I excited about that trade? Not particularly, because this gap is kind of small. It's not big like this one. And the pullback is, yeah, I guess that pullback's pretty good because from here to here, because you got to remember your resistance is going to be potentially the pivot. How do you know that? Well, let's try this. Bam, up to a daily high, rotated down into your 9 EMA, back up. Where did it stop? Right at your pivot. That's why when you take this, if you took this trade right here, this is why I would never really be interested in this one. First of all, the entry is so far from the 9 EMA. And second of all, it's so close to this pivot. And with the NQ, man, zing, zing is, you want those gaps I talked about. Gap and then gap. Like gap. See this gap here? You want these gaps, these spaces that shows that price is moving. You want that slingshot to be pulled all the way back. See, when these red candles are forming here, they're creating the tension of that slingshot before they let it go. That's what these candles are. They're squeezing all those stops out. All right. So let's talk about this. Let's keep going here. Again, we have, hoppity, hoppity, hop, nothing really going on here. Create a new Donchian high down. I mean, there's some stuff here. It's not stuff that I would have been excited about. So why am I even talking about the NQ today? Well, to be honest with you, because something did happen that would have gotten me excited. And it worked exactly to a tick, to the T. And what is that? That's the 5 minute red line. So we get past, say, 10:30. And we're sitting here kind of trending up on top of the 9 EMA, just sitting there rolling along top of it, rolling along top of it, rolling along top of it. I mean, there's some scalping money you could have got in here. There's no doubt about it. But I'm not about scalping. I got those 10 accounts. Then all of a sudden you get this breakthrough, and you got a whole new candle below that 9 EMA. And here's the pivot that rotated up, and you've broken it to the downside. I mean, it's starting to get a little ugly here, okay? Then all of a sudden, wham! I mean, we keep going and keep going. And so when they broke down through here, it's like, where are they bringing the slingshot to? Where are they trying to stretch people's stop losses? Where are they trying to squeeze out the money? Remember, they had all these loafers free riding all the way up. So here they started making them bleed. Okay. And so remember, this is a 5 minute moving average. So that means people trading this are using 5 minute candles. If they're using 5 minute candles, they're not seeing the little they're not seeing this little stuff in here that you're seeing with 1 minute candles. So that's why I'm saying on a 5 minute red line, you want deliberate movement. That's very deliberate. Look at the size of this gap. Deliberate movement, but it does not have to be smooth. It can hiccup up and then down. Because to a 5 minute trader, he's just seeing 5 minute candles, and all the noise in the candle is not really changing his opinion of the trade. So when we sat on top, let's go back here. So when we sat on top of here and closed on top of this 5 minute red line, you should have had your long one tick above this when it closed. After it closed, then the next one opened, and holy cow, this makes it even better. Now you got an inside bar. and you're even closer to the red line. When this one closed, you move your entry to one tick above that, and then bam. Now, what am I doing? Let's talk about resistance here. Now, where are your problems on 5-minute red lines? Well, normally your first place of problem is the 9 EMA, because now we're underneath the 9 EMA. So a lot of times it's going to be pushing price, say, down instead of up. So that's your first level of resistance. So let's talk about your 3 spots of potential resistance / reversal. One is here. One is here. I'm doing a terrible job of this. Where price rotated and pivoted from. Okay, this is a pivot, rotated up and pivoted from. So this is the second one. And then the third one is here, where it topped out before it rolled over. Okay, so I'm taking this one out of the equation because from here to here is like $1,600 to $1,700 with one contract. I'm not swing trading. I'm trading, to kind of keep from having, from eating up trailing stops and things like that, because I got those 5 new PAs. So I don't want any of that, but I'm more than willing to manage it through here if I can to here, okay, as a target, and then and from here to here, right there, which would be before your pivot, you're looking at a $580 one contract trade, okay, from the break of this candle to here. That's $580. When this candle right here, which is touching that 9 EMA, closes, I'm going to have my stop right underneath it, because if we roll over, then that means the 9 EMA is going to work. So I don't want to give up. I don't want to lose money on this trade. Okay. And the fact that we got to get in and there was space between here and the 9 EMA is kind of like having space to your pivot, because that means your resistance area is further up, further away. So you can manage your stop into a break-even position or better by the time you anticipate your price action to hit resistance. So let's keep going. Let's see what happens. Ooh, okay, so now we're going up and through it. Ooh, we are through it. Okay, so I'm following with my stop, following these candles after they close. And then wham, and then here we are at the pivot place. Look at that. Guess what happened? There you go. There you go. There you go. Have you seen this movie before? These are not by coincidence. That rotation at this spot is not by a coincidence. No different than this rotation at this spot is not by a coincidence. Okay? And it's when you start recognizing those places, you start giving yourself a visualization of your risk reward to your trades, and you can start better understanding how to manage that trade when you're in that trade. Okay? I'm going to skip the RTY because this video is getting a little too long. RTY had actually some beautiful setups today. But but they're similar to the NQ. All right. So everybody have a good day. Talk to you later. Bye.